All right. Good evening, everybody. It's Thursday, 4:30, July 9th. I wanted to do a quick update on the Bitcoin and market analysis. So first thing that I'm seeing is if you saw this descending trend line that I had right here, as you can see, we pushed up past it all the way towards the June monthly open and then collapsed back down inside it when the equities market sold off. The interesting thing about that is, equities, I think pretty much closed near flat or, well, I guess not flat. I think they're down about 20 points or so. However, Bitcoin actually dropped from its 94.40s or 94.50s high all the way down to, there's a low right here. The low was 91.61, so pretty aggressive drop right there, $300 or so from this top right here. All right. I think the interesting thing about this drop is that the previous consolidation that we had and the breakout from this descending trend line has pretty much been now seen as a fake out because you collapse back down inside the trend line. So you can't really see that as like a real breakout, unless somehow Bitcoin figures out a way to push, outside this trend line again, and then get a breakout above this 9.4 area. But until then, I would probably consider this a failed breakout. And so yesterday, the interesting thing was I actually saw, where was it? I think over here in the short side. Now this is our short trade. Let me see here. So yesterday I cut some of my swing short position. As you can see, my average has been 96.40. I've had this, I told y'all, since the beginning of June, I've had this position. I've been adding on up and down. Even June 22nd, I think I added some, took some off. So I've been going back all the way into beginning of June, having opened this position. And so the point is, I'm still short. I still don't see any reason in the market to be long, or at least net long, for me to think that this is going to break up. This breakout and then, fake out, and then we close back inside the trend line, pretty much confirms to me that the bears are still overwhelmingly strong, and no matter what happens, any pop up that you see, a couple $100, has been aggressively sold off. So that's not really, something that you can say that, oh, that was bullish that we broke out. Well, 24 hours later, we're pretty much back to where we were yesterday, right? So you can't really say that bulls have, any semblance of strength until you actually start putting in, maybe a key higher high as per at least this swing high right here, 96.65 or 9,700 or so. Until then, I think all we've really done is, we put in this high, lower high, another lower high, and now another lower high. So while everybody got excited here, thinking that we're going to go to 10K, 11K, or 13K, our community stayed pretty reserved. We didn't really aggressively long, but we did long up here. Unfortunately, we got stopped out in a tight stop right around 93.50. But then for the most part, I also added to my short. So you can see yesterday, right around when we were just breaking out of this trend line right here, 93.20, I closed out about 25% of my position, but then I said, well, it looks like, we pretty much pushed towards 9400s. I'm just going to pretty much, tack on some of my position that I just cut $100 ago. So it was just free money, right? You cut $100 lower in terms of your short and add back some of your short again, $100 higher. Right? So being able to manage your risk and understanding when to take profit, especially when you start seeing the signs of a potential breakout, are really good active management styles and effectively a way to contain your losses or at least take profit, So this is, something that I do in the community. Often I let people know exactly how I'm trading my position in and out. And so people get to see exactly, how I'm walking in and out of the market. All right. Let's check out the equity side real quick. I thought this sell-off was quite aggressive, and our equities analyst Faisal, I think I told y'all that we typically do videos every Wednesday and Friday, um, and Faisal and I get to discuss pretty much every single day exactly how we're trading the market, what we're feeling, what we're not feeling, and so today, typically, right around the beginning or the middle of the day, Faisal puts out these updates. And so the one thing that him and I agreed upon is right around this area right here, especially going into the week, starting off Monday. I think both him and I were a little reluctant to, be aggressively long up here. And this is a daily chart, right? And this is the S&P 500. So for the most part, like this thing looked a little bit toppy right here, especially with tech stocks. I mean, I think you guys know, Tesla's, $1,300-$1,400. They're trading at like 38 times PE. Apple stock is, aggressively high, trading at like 27 PE, trading at $380, even though I think they said that their sales are going to be down this coming year. Same thing with like big tech stocks, and the reason these tech stocks are important is because they're actually carrying a lot of the weight in the indices, the respective indices. And so it kind of makes you suspect that, well, I mean, okay, the market is doing all right. It's doing great. The Fed has, pretty much put in unprecedented liquidity, but a majority of that weight has been carried over into tech, and tech is already overvalued. So, well, what does that tell you? Well, I mean, that tells me at least that it's time to be cautious, right? I mean, we might see another pullback of 5, 10, 15%. And so what I did today was I closed out some of my positions. Here you can see, so I had Beyond Meat. I think my Beyond is, I'm not down that much. I just checked post-market, like, let me see. So my entry right here is around 143, 143.2 or so. And so you could see, we closed the market out at 141.22. Not too bad. Uber, I have another position, Uber. Uber, I got in right around like 29.3. I think this candle right here. And I let my Advantage members know exactly when I'm getting in. I think this is the one benefit that you have in our community is, you have live analysis of me stating exactly when I'm getting into the position, pretty much, on the minute. Obviously, it's not going to be like live, but, literally like around like the 5-minute window. And so I let people know right around in this hammer right here when I was getting into Uber. And so I got in around 29.3. Let me see where that is. So from here, you can see we're up a good 13.3% or so. And that's reflected, in my portfolio, right? So more often than not, I show people exactly what I'm trading, how much I'm up, how much I'm down, just to, be transparent with our Advantage community members. Really nothing to hide. I'm not one of those people who's just going to willy-nilly say that I'm buying this and buying that and not show you guys that I have a stake in that position. It just keeps, me as an analyst, me as a trader honest, right? And so point is, I took some profit on Uber, took some profit on silver. Another great trade that we're in right now is the pound dollar long. And that one's been going pretty well. Let me check that real quick. Let me see here. I forgot where we entered. I think we entered like on the breakout of this candle or something. So let's see. Where's our forex? Right there. Where do we enter? Let's see. Okay, so I got into the pound dollar long right there, as you can see, 125.733, and I think I added size all the way down to about 125.1. So I took some profit, about 50%, sold out, caught about like 76 pips or so, which is pretty good given that it happened in less than 24 hours. And then the next day, which I think like it was yesterday afternoon or so, and even today, the pound just kept taking off, right? So even looking at this today, I'm thinking, well, I might want to take some more profit off the table, because looking at this chart right here, right, this is the one thing that I mapped out is, this area has been key resistance across the board, right? Even over here, this little deviation upside pretty much comes back inside the range. So I'm thinking that, okay, well, we pushed up past it, couldn't hold above. So I think I'm going to cut out of some more of my position right here. So yeah, I mean, that was a pretty darn good trade in the pound dollar. And these are the kinds of trades that, we've been taking on and off and letting our Advantage members know exactly how we're trading them. Okay. So let's go back to, Bitcoin, right? And in terms of the daily chart. On the daily chart, the one thing that we can make an argument about is, if you look at this blue line, let me get rid of this thing right here. Close this out. Okay, so this blue line, this is a 92.25 marker, okay? This could be different on different exchanges, excuse me. But I think for the most part, if you look across different exchanges, this area, this marker, the way it goes across, way back from 2019, is particularly important. And so the point is, we're currently right around 92.39.5, I guess, but we're above this marker, right? So I think it's a positive sign, temporarily, but positive nonetheless. However, the thing about this is, if you start breaking under this marker, again, you will have effectively created this area as a deviation, because you're already trading under the area. So if you trade above it and then you collapse back down under, well, then this is really, a fake out up here, a deviation, and then now you're potentially pushing to the downside, which effectively brings us back at least towards these lows around 9,000 flat, and possibly even lower, right? So I'm kind of looking at this and trying to figure out, well, let's see how the day closes. I mean, if the day closes as is, well, then that's a bearish engulfing, right? Because you had to push up, consolidated, pushed up again, and then you have a bearish engulfing. So what I would do is, if you're not short, and again, you guys have been watching me for a while, I've been bearish in this entire thing, and not for no random reason, right? I have reason to be bearish. Reason to be bearish because this whole thing looks like distribution to me. Demand has not stepped up. In fact, supply has already shown you over and over again, every time you pop up, you get sold off within 24 hours. So what's the real deal about, bulls saying that this is going to push up? It doesn't make any sense, right? So the point is, if this is a bearish engulfing, you could potentially short this with either a stop above this area or a deeper stop above this area. And I still believe, right, in large part, I mean, yes, we're kind of trading in a range. Let's pull up a different chart. So this blue area right here is a range, right? From this key high this key low to this key high. Everything above and below seems, for the most part, deviation, because in large part, you contain the price within this trading range. And so if you contain the price within that trading range, well, all you really have to do is you can look at this area right here and you can see, all right, well, price hit, this area of liquidity, this pocket of liquidity right here, and then collapse back down inside this big descending triangle. So that's bearish, right? I think another way you could look at this is, you could say, well, the July monthly open and the weekly open are right under us right here. And so this could be potential support. Until we break that, you haven't quite confirmed that we're going to head down further. I mean, I think that's a fair argument. I think that's the only argument to be made in terms of neutrality, and not being aggressively bullish. Or rather aggressively bearish. But again, I think, the case has been made, in my opinion, which is just taking the longest time ever, because I feel like we've been trapped in this range, for forever. But in reality, it's only been like 2 months-ish, right? 2.5 months or so. Because we got here around, we hit that 10,000, or actually we hit that 10,000 mark around May 7th. Today is what, July 9th. So yeah, I mean, just a little over 2 months, we've spent most of the time in this large choppy range, as you can see. However, you know, if you look at previous distributions, right, for example, this area right here, way back in June all the way to September before we dropped off, well, yeah, I mean, that was a good, 3.5 months right there, right? Sideways movement, consistent lower highs, bouncing off this area and then finally breaking through. And again, chopping around this area for a month, short squeeze, and then dump even lower, right? Let's go back to 2018. Same thing. Got to a high of 20,000 in December, January all the way to about November, right? So January 2018 all the way to November 2018. You kind of just put in lower highs again over and over. And guess what? Created another, right, descending triangle, right? Descending triangle right there. Oops, sorry for the shitty drawing. Descending triangle right there. And now, on a smaller time frame, we're kind of creating the same thing where it's like a descending triangle right there. Something to be aware of. Maybe Bitcoin likes, descending triangle distributions. It's possible. Listen, some assets, they have a particular behavior behind them. I mean, once you figure it out, it's kind of better or almost an edge for you to trade it that way. I'll give you guys an example. I honestly hate shorting the pound against the dollar, but I love longing the dollar against emerging markets. For example, dollar South African rand is my favorite currency pair because I understand it better, because it operates in terms of its fibs, its SR levels better. I particularly suck at, let's just say dollar euros. Euro dollar, which is, a different kind of pair, right? Because you're effectively longing the euro against the dollar. For me, it operates better. Okay? It's like the same thing as, Bitcoin US dollar, you might trade it well, but ETH BTC pairs, you may not, right? Because every chart or every pair has its own, particular set of tendencies that it has, right? For example, falling wedges might work better on Bitcoin US dollar. 618 Fibonacci retracements might work better on ETH BTC pairs. So having this edge and knowing exactly, what works in markets will help you over time. And so what I'm seeing in this market is the same kind of descending triangle that we've had twice already in 2019 and 2018 before we distributed and then broke down. I mean, we're creating the same pattern. We're in the same kind of juncture in terms of, price action and the macro outlook, right? For example, equities are overextended. Bitcoin has been trading in a range for like 2 months. I don't think the demand is there at 9,000. It's probably going to go much lower, maybe low 8,000s, maybe low 7,000s. I personally think it's going to go much lower, but at the very least, it ain't at 9,000, right? So, well, that should tell you that, okay, well, we have a descending triangle setting up. We don't have demand. We actually have overwhelming supply that every time we push up, it takes us less than 24 hours, 48 hours to cover up that entire movement that we pushed up on. So, these signs are there for you. It's a question of if you want to trade it that way, right? Let me see here. I don't know if there's anything else to talk about. Let's see. This is not updated. This is the COT data. This updates every Friday, so that's not going to help. You know what? I do want to talk about this because I actually posted this on Raoul Pal's Twitter feed. So the interesting thing about this, let me stretch this out a little bit further so you can see. The interesting thing about bonds, okay, and again, if you understand macro and if you understand these larger themes that are at play aside from Bitcoin, this information is useful to you. If you're simply following Bitcoin, then me talking about equity markets and whatnot, and even bonds is not going to be, helpful, nor is it going to be knowledgeable for you. But nonetheless, I think it's important for anyone to really pay attention to the S&P 500 and to the bonds, especially the 10-year yield right here. Why? Well, a couple of reasons. When the bonds start showing you weakness and the dollar starts showing you, strength, right? Well, what that effectively means is that more people might be piling out of equities, right? So they're exiting equities, they're entering bonds, or they're going into cash. How does that help you with Bitcoin? Well, let's see. When we saw this big spike up in the dollar, right? Our theory of dollar going up matches, okay? So let's check if the 10-year moved up around that same area, right? So this was, again, the 10-year pushes up, okay? And then what happened to equities? Well, I mean, you guys know what happened to equities, right? The equities pushed down aggressively right there, meaning people were exiting equities, which are, again, considered high-risk assets. Same thing like Bitcoin. I mean, Bitcoin is, you can't even compare it to equities or bonds or anything, really. It's a very high-risk asset, and it's largely speculative. So the first thing that's going to get sold is, something that is very speculative, doesn't even have that much liquidity, and can't really even be compared to the safety and security of equities. So Bitcoin gets sold first, equities get sold in panic, people pile into the dollar, and they pile into bonds. So when bonds start breaking and the dollar starts pushing up, well, it's possible that more and more people are exiting equities, and that means more and more people are exiting Bitcoin as well. Because Bitcoin is a far higher risk asset, even if you compare it as part of the equity class, right? So this is why you pay attention to bonds, and this is why you pay attention to the dollar. This is something that I do every single day. I have alerts set on bonds. I have alerts set on the Dixie, which is the US dollar ticker. I have alerts set on equities. I mean, I trade these every single day, so I don't really need to set alerts. But nonetheless, these are the things that I watch from a macro perspective. This is what gives you an edge in the market, guys. I think gone are the days where you could simply look at Bitcoin and just trade it and say, all right, I'm just going to buy every single dip in Bitcoin and not pay attention to what's happening in the equity markets. All right. So if you want edge as a trader, these are the themes that you have to pay attention to. Let's see if we can find anything else that we can discuss. Okay. Here's sort of a free trade, or something that I was paying attention to. All right. So I have the itchy cloud right here, and I have the Bollinger Band right there in the white. I'll show you guys that individually. Let's turn off the volume because SPX doesn't have volume. So this is the Bollinger Band. Okay, turn that off. And this is the itchy cloud. On the 30-minute time frame, you can see, actually, let's turn on both. You can see all three of the Tenkan, the Kijun line, and the middle Bollinger Band converge right there, right? On 30-minute time frame. So what I did today was, remember I just showed you guys I closed out of Uber and my silver position? Well, I didn't panic when the market dropped like this. What I did was I waited for a rebound, and I said, you know what? Let's see this grind back up into this area right here, which is the pocket of middle Bollinger Band, the itchy cloud, Kijun and Tenkan lines, and then I'm going to sell there. Those are, from a technical standpoint, that's why I sold. But from a macro standpoint, there are other reasons in the market to also sell. One, because I told y'all before that I think the market overall is still extended. There has been news where, the market might be trying to price in a Joe Biden victory. And so that means that tech stocks and some of the market is going to take a hit because the Democratic policy is a bit more fiscally prudent or responsible or, tight, whatever you want to look at it, right? With Trump and the Fed right now, well, I mean, that policy is a little bit more laissez-faire, where it's kind of like, we're going to give, well, it's not even laissez-faire, actually. Laissez-faire would imply, hands off and, the market should do as is. It's more so hands-on and the Fed will have your back. So it's more so the Fed liquidity is really driving up the markets. And so if that's the case, well, the market feels a bit more content with the Fed, effectively pushing and creating that liquidity pocket and creating that bid in the market. With the anticipation of potentially Joe Biden winning, well, I think Joe Biden might be a little bit more tougher on big corporations and tech. He might be a little bit more tougher on defense companies. Healthcare might do a little bit better under Joe Biden, right? So the point is, right, I don't mean to get into the granularities of, how the sectors are going to be impacted by each respective president. But the point is the market overall was trying to, in my opinion, price in maybe that potential Joe Biden victory. Or maybe even it's an uncertainty and we might trade in a range until the market itself figures out what's going to happen in the presidential election. Are we too extended in the market? Do we need a pullback in the market? And, various reasons otherwise, right? I think from a technical standpoint, I think a good 5-10% pullback in the market would be very healthy. I know everyone talks about the stocks consistently going up, but it's just very unhealthy to be at these levels, guys. I'm telling you, it's like, if someone told you that, you get to, this is a bad analogy, but if someone told you that, hey, you can jump from a window that's, 10 feet high versus a window that's 40 feet high, you'd say, yeah, I'll take the 10 feet, right? And so this movement back up was kind of our chance to maybe clean up the zombie companies, clean up the badly run, companies, the excess liquidity that was already in the market, the bad loans, the free money, the low interest rates, all that stuff this was our opportunity. But instead of us kind of doing this and then doing that, well, we took the other route. We said, let me just give the market more free money because we ain't got time to clean up our mess right now. And so let's just keep pushing higher. And so what that does is it effectively creates a bigger bubble, right? I mean, I think you guys very well know, this is how it relates to crypto, okay? So I've discussed this model before. Let me see if it's on here. I feel like I'm getting into so many different things. I just wanted to do a quick analysis, but I feel like sometimes it's important to give context of where I'm coming from rather than just, blanket, just say, well, this is a bubble, right? I think it's important to provide that kind of context. So here's where things get interesting, okay? So with the money that has been thrown into the market, the zombie companies, and this cleanup of cleansing of companies that should have happened, what we effectively did is we threw companies another lifeline, more leverage, more loans. This relates to Bitcoin in the same way. I've talked about this before. Phases 1 and 2 in Bitcoin have been about truly the idea of Bitcoin and what it's supposed to be, which is potentially maybe an alternative financial system, an easier way of individual freedom of money, a way of not having the government, being able to steal your money or have control of it or oversight or whatever, right? Once you got into this mania phase right here, we've been in this phase 3 area for the last 3 years. This is where the traders and speculators really came in. And so in this area, what has effectively happened is there has been a lot of speculation. It's been a lot of trading, and it's been a lot of leverage. The leverage in this area right here needs to get cleaned up. If this asset is supposed to be alive or be tested in its toughest way, it has to go through strong bear market cycles. And I don't mean, this cycle that we just had where we, V-shaped recovered almost in less than 3-4 months. This ain't a bear market. If this is a bear market, these are the beginning phases of a bear market where you do something like this and then you start rolling over again, right? And so the more pain that's felt on the way down is actually more pain felt by all these traders and speculators. So if you look in this area, right? I mean, say anyone who bought, all the way in this box, they're doing all right. I mean, some might be down negative 20%, some might be down, negative 30%. Some might only be down negative 10% or 20%, depending on, where they bought in the last year. But you pressure that price down further and you take a longer time to bleed, well, then that's where you inflict pain. Not only on miners, but on the traders and speculators. Because they have to pay the funding costs, they have to watch their position slowly bleed, right? And that's where the impatience and the broad market scenario, the broad market scenario of if the market keeps bleeding, well, what will happen to Bitcoin? It's probably going to bleed twice as hard, right? So if it bleeds twice as hard, that means that if the S&P 500 drops, let's just say another 20%, Bitcoin might drop 30, 40%, which at least takes it down, let's just say right there, right? So remember, over here, we made this argument that S&P 500 from its high to low dropped 35-ish%, right? Bitcoin from its key high in February right there to its key low dropped about 62%. So almost double, right? Or like 1.5x or 1.75x, right? But close to double. So my point is that if the stock market starts seeing a pullback, well, so will Bitcoin. But the other caveat to this is, even with the coronavirus, not even in play in February right here, well, we still didn't get past this area, right? The 10,500 key resistance marker, which is, as you can see right there. We didn't get past it. We struggled, and then sold off. So we're doing kind of the same thing right here, putting in technically another lower high, because this was a high of I think on actual exchanges, it was like 10,584. This high was 10,550, and this key high was like 10,475. Okay? So with all these lower highs that you see, if Bitcoin cannot get past this key resistance marker, well, then it has to dig deeper. It has to flush out more participants, grab more liquidity from down here, generate more interest, and then maybe push back up. Okay? So the conditions for Bitcoin right now may not they just may not be conducive, right? They may not be good for Bitcoin to break out. The money might not be flowing into Bitcoin because the money is going into the stock market. I mean, you could make so much money in the stock market. First of all, no one really gives a shit about these random altcoins, right? DeFi and whatnot, no one cares. It's too hard to understand, too many different exchanges to open up versus Robinhood, E-Trade, Webull, TD Ameritrade. You could just hop on, open an account, 10 minutes, connect your bank account, boom, done, right? So you could see the one thing that crypto had going for it was, the allure of making a ton of money and the volatility. Well, that's kind of been crushed, and its own, I don't know, difficulty and barrier to entry has made Bitcoin and crypto a little bit tougher for others to access. Now, I know the whole thing about a lot of people, on TikTok are talking about Dogecoin and this and that. I get it, but these people could just as easily go on Robinhood and make a ton of money too, right? So I think that the key difference and separator from 2017 bull market to now is, well, you have a pretty massive bull market in the S&P 500, or at least what seems to be a bull market, where you can, buy Tesla stock and it goes up 30, 40% in a week or something, right? Because that has happened. It's gone up significantly. So many other vaccine stocks and med stocks and penny stocks and things like Hertz and bailout stocks, they've gone up a lot. I mean, way more so than cryptos have, right? So I think, when I'm looking at the stock market, I'm concerned that we're not cleaning up the junk that we had already created. And then same goes for Bitcoin, is we haven't cleaned up the leverage or the excess in the market that we had created for the last 2 or 3 years. And so my idea of, the big flush to, $30 or $2,400, $2,500 and potentially all the way down to $1,200, $1,300 still holds true. But I don't want to think about that yet, because I understand that we're still trading in a range. Unless we break down from here, there's no reason for us to start talking about 7, 6, 5,000, right? All we can say is, all right, well, we failed to break out over here, and now we collapse back down inside that trading range. Well, now what? I mean, we just got to watch the stock market. If the stock market starts selling off, you best be sure that, Bitcoin will definitely sell off. It's not even a question. I mean, it definitely will. Because you can see this whole time, Bitcoin has been connected to the hip with the stock market, right? Let's do a comparison, You can see right there, look how tightly, coiled they are together. And even on a small time frame, you could see, look how very tightly, coiled they are together, up and down in terms of their movement. So the best edge, that I think traders have right now is watching the stock market, which is the S&P 500. Okay. I think that's pretty much it. I don't think I have any questions, but on the advantage side, got to be honest, we have some people over here who have been killing it in the alt space, especially our friend Oregon Elizabeth, Ezekiel right here, T-Bone, Crypto Carl. All these guys have found very unique opportunities in the alt space. Something that I haven't been able to do because I don't really trust altcoins. I also think that there's much more money to be made in the stock market, but that doesn't mean I'm going to, discount the fact that people are making money in the alt space. So I think that if you guys are interested in learning how to trade alts, come join, come talk in this side of the channel right here, Trader Talk Alts. And this is where people are seeing amazing gains in the market, where people are seeing, tremendous opportunities in altcoins. But that's pretty much all I have, guys. You guys know our style in Alpha Trades. You know exactly how we trade in the market. We're very transparent with our information. And I think we just have an amazing community that I'm very fortunate to lead and be a part of. So I hope y'all come join. There's a Discord link below. Hit the thumbs up and let me know if you enjoy the content. All right, take care. Cheers.